In the middle of each of those explosions, and we're in a bigger one now, but in the middle of that clock, there was what you could call a stumble or a correction. For instance, in January 2011, in the $20 plus range, you had a monthly reversal in silver where it made a high and then closed down on the month. So price chart technicians would say, oh, that's a reversal month. You turned around the next month and blew the lid off of it again, even more than you'd done. But you had a midpoint stumble. If this T-bond event continues for another day or two, you're going to panic the Fed in a way you've not seen before.
Wow, you're talking about an imminent event here.
Yes, imminent.
You're talking days. Okay.
Get us maybe to that midpoint in this 6-month swing in silver. Like get us into February, let's say, maybe, but with headlines. And you could, here's the thought that I've put out there. The Supreme Court is going to decide on tariffs. Most people don't know which way they're going to go. I have a strong suspicion they're going to say no. There'll be a point. This is something we do for our subscribers, aside from trying to get their attention off the day-to-day swings in silver. We've been telling them for months, if you see a 10 to 15% drop and it looks like hell on a daily chart, buy it anyway. And if you go back over the last handful of months and every time you see a 15 or 8%, 10% drop, if you bought it instead of selling it, you're way ahead of the game, okay? Somebody knows that because somebody's buying it, not just somebody, but bodies. But you still have this overwhelming doubt. And here's an analysis I gave my son this morning. I noticed that before silver would hit a higher gold, even like back in April, and gold went sideways for 5 months. Doubters. It didn't break down, but they capped it. And then you broke through, and then in October you had another pause. The pause was only then a couple months, shorter time span, and then you jolted again. Same thing's going on in silver. You could have a whole year-wide pause at $35, late 2024 through early 2025, but basically a whole year of this with a 35-plus cap. Whole wasted year. You bored to death, okay? Doubted. And then it went through that and jolted up another $10 or so. It's been a layered process. But I even noticed that on day-to-day action. Take today, for example. We jolted up to $95. And they spend the whole day selling against that and dropping it back down to 93.
Yep.
Except instead of it lasting 3 months now or 2 weeks now you can measure those pullbacks in hours. So things are speeding up. I suspect the T-bond event, and we've expected this all along, is possibly the event that creates the headline crisis. And if it does, we've, in our analysis of some prior surging moves in silver, for example, in 79 to 80, where it went up like 5-fold in 5 months. September 2010, April 2011, up double and a half in 7 months. In the middle of each of those explosions, and we're in a bigger one now, but in the middle of that clock, there was what you could call a stumble or a correction. For instance, in January 2011, in the $20 plus range, you had a monthly reversal in silver where it made a high and then closed down on the month. So price chart technicians would say, oh, that's a reversal month. You turned around the next month and blew the lid off of it again, even more than you'd done. But you had a midpoint stumble. If this T-bond event continues for another day or two, you're going to panic the Fed in a way you've not seen before.
Wow, you're talking about an imminent event here.
Yes, imminent.
You're talking days. Okay.
Get us maybe to that midpoint in this 6-month swing in silver. Like get us into February, let's say, maybe, but with headlines. And you could, here's the thought that I've put out there. The Supreme Court is going to decide on tariffs. Most people don't know which way they're going to go. I have a strong suspicion they're going to say no. And that they are seeing this broader than just a legal case about tariffs and how they read the Constitution or whatever. They know that what's going on in the world now, especially today, for example, where you read that headline, that
Yes.
sell all U.S., they could step in and put their foot through that door and maybe stop the tariffs and therefore, quote, save the world, if you know what I mean, by stopping the panic selling of U.S. assets, by cutting off his tariffs against Europe, for example. If that were to happen, but a panic first, okay, T-bond climb, don't be shocked if silver goes vertical for several days. Like maybe it doesn't pause till it's 120, 130 bucks. And maybe has a couple limit up days, 10% per day on the COMEX. There could be a point in there where if they decide that way, and it's got to be days away or a week away, Supreme Court decision, but I can't find specificity on that.
Right.
You look on the internet, you won't find it either. We
I'm
know,
Googling right now.
yeah, and that could try to temporarily put a hose effect on this fire. It won't ultimately stop it because there's far bigger things underway here. But that could be one of those events where silver goes berserk prior to that. Stock market gets gut kicked another day or two like it's doing today, and the T-bonds move into what could be called a panic sell-off. At that point, suddenly the non-owners of silver or the shorters of silver think, uh-oh, I've been on the wrong side. I've not been long, or what the heck am I selling this for? I got limited up today. I can't get out of my shorts. We could be headed for that kind of speedy process, literally at the time of this interview, you know.
What you mentioned before, so within the next 6 months, you wouldn't be surprised if silver could possibly hit anywhere between $300 and $500 an ounce?
Yeah, with a jiggle. No doubt there,
With
I
the
think
jiggle,
there
right.
will be a jiggle in the middle that will scare the heck out of people, even the ardent silver bulls.
And gold would be way north of 5,000 at that point.
Yeah, I think, what if, for example, gold hit 8,000 and did its, quote, normal eightfold move? It's done it twice prior to bull markets or eightfold.
Yes.
Or do it again.
Yeah.
That's not exceptional. That's just doing it again, okay? And it goes to 8,000, and silver goes back to its spread relationship of gold would have had in 2011, where we were 50 bucks. It's 3.1% the price of gold. Well, what's 3% of 8,000? Pretty nice number. But when you factor in also Eric Sprada, a friend of mine, you know who he is.
Yes, of
He's
course.
been making the argument in speeches that, if you take the money supply and factor that into the price of silver where it was in 1980, and notice the money supply growth since then, or 2011, and note where the money supply growth has been since then, what percent gain, then, add that to those two highs and you come up with numbers well up in the couple $100 just to match the real buying power of silver at those two peaks. Though they're seeing the effects, the consumer price effects, and I think on oil we analyze it closely, and commodity complex. As far as we're concerned, the commodities are starting their next bull leg, much like that 2020 to 2022 doubling in the price of the Bloomberg. I think we're going to start another one. Oil's the laggard, and it's the one where President Trump said, I'm going to keep gas prices down. Right now, our technical analysis of oil, forget all the headlines, because the headlines are, all the fundamentalists say we're going to 40. Fine, I love that. They'll get ambushed. The technical suggests about a handful of dollars above where you're trading, less than a handful of dollars above where you're trading right now as we speak, which is back above 60. You're going to trigger some technicals that could violently move oil up out of this 60, 70 range, and probably on the first thrust get us into the 90s. A 50% increase from recent prices. That would jolt, again, the average Joe when he pumps that gas and sees the clicking. Even then, that's how he sees inflation. He doesn't see it with the money growth. He really should, because every decade, about an 80% increase to 90% increase in the money supply. So like when your granddad built the house, it was $4,500. When your dad built one, it was $45,000. Median home now is $450,000. What's going on? Decay in the money in it. Over, one very long human lifetime.
Exactly.
And that awareness, people don't look at that factor. They look at CPI and stuff like that. But that will be impacted, of course, by increase in the money supply. So when they print more to save the bonds, gold will go berserk because it's real money. Half the world already realizes that and is starting to shift to maybe going to gold again. And the Western world, which is a laggard on that issue, might, if they get into a crisis, finally say, hey, this hasn't been working. Maybe we should go back to gold,
Or they're going to look at stable coins.
Though no opinion on that. We have a negative view on Bitcoin. I know that. We were negative months ago before it had its recent crash, and I think it's going at least to 60,000, probably, sometime in the first half of this year. That would be a total wipeout for anybody in Bitcoin over the last handful of years. I mean, you were 127,000. They're going to cut you more than in half. And I think any talk of at least crypto being an alternative money unit will go out the door. And already it's starting to. Where the crypto people are starting to recognize, look at gold.